Who here has a Roth IRA? And then how do we complement your portfolio with that? So I'm from a place called Champaign-Urbana, Illinois, back in the Midwest, and there's a lot of farmers out there. So imagine a farmer has his bushel of seeds, and he has the opportunity to not pay tax on those seeds yet. So he plants those seeds, and now he has this huge harvest that's all taxable. Well, would you rather pay tax on the seed or on the harvest? The harvest now is all taxable, and tax rates in the future are probably going to be at a higher rate than they are today. We talked about that. So imagine that farmer saying, okay, I'm going to rip the Band-Aid off. I'm going to pay tax on these seeds now. He plants those seeds. Now he has this huge harvest that's all tax-free. And if taxes change in the future, it's not affecting him. He gets that income. He gets those withdrawals tax-free. And that's a huge benefit. Now, Roth IRAs aren't exactly right for every single person. It all depends on your specific goals, needs, and resources. And that's where that phone call that we have with you, we can kind of guide you and say, hey, this makes sense, or maybe that doesn't make as much sense for your situation. Everybody is different. So there's one thing where you do a Roth contribution. The other one is a conversion. So most people have IRAs and 401ks. Is it the right time to do a Roth conversion? Well, Colin was talking about the market having some volatility, and we've seen some of that today. So let's talk about how do we take advantage of some of this recent volatility and some of these new tax law changes and work for you instead of against you. So here's an idea. So let's say that back in February of this year, you had about $100,000 that you wanted to convert to your Roth IRA. Well, at a 24% tax bracket, that's about $24,000 of taxes that you'd have to pay. Well, since then, the market has done a correction. It's dropped, say, 30%. So let's say your $100,000 is now $70,000. Now, hopefully, if you stay invested, that $70,000 will come back up to 100, and hopefully more gains on top of that. But we have an opportunity now where if we wanted to convert $70,000, 24% taxes on that is only $16,800. So now we can take advantage of the market being low. We don't sell those holdings. We just move them from the tax deferred bucket to the tax free. Pay tax at a lower rate, let the market rebound and recover and go back up. And that's a little bit of an advantage that we can start helping families work in your benefit.